we get, and let's see whether the investors are as excited as well. We have Shiv Sehgal, who's the president and head Nuvama Capital, joining us from the sidelines of the 21st Nuvama India conference. Thanks a lot, Shiv, for joining in. Day one of the conference yesterday. Just wanted to understand how the mood is when it comes to investors, particularly the FIIs. Are they, looking to return to India after the kind of selling that we've seen? And you also had a lot of IT companies yesterday. What are those guys saying? Because those are the two pain pockets of the market right now, right? IT and the lack of FII buying.
A very good morning to all of you. I think very pertinent questions. Everyone wants to know what the FIIs are thinking, especially given the exodus of the FII flow that's been happening in India for the last couple of months. I do want to start off by saying that if you look at the participation of the FIIs at the conference, one wouldn't feel that India has been out of flavor for the last couple of months. I think it's without doubt that given the catalysts that have just transpired over the last couple of weeks, we have had the trade deals out, we have had a credit growth reviving, there are green channels and green snippets coming out of channel checks, that there is a lot of chatter that India is now coming out of a very large and strong, painful consolidation phase. So I wouldn't be surprised, given the mood at the conference, that foreigners start nibbling back. Yesterday's data was just a snapshot, foreigners buying 2,200 crores, and I think that is only going to continue. I have said that in the past, that the pendulum of sentiment in India and foreigners to India kind of swings from one side to the other at the extremes. And I think the foundation has been laid for the next kind of growth run in India, and that's what we're going to see.
Well, Shiv, where are you seeing these FIIs put incremental money? What are you hearing? And on IT, as Manglam was saying, I mean, the sector can't seem to catch a breath. It was H-1B visas earlier. Then it was, the tariff uncertainty impacting discretionary spend. Then you had, the tech rout in the US impacting Indian IT stocks. You think the markets are overplaying the concerns? The sector's been written off too many times.
So great question. I think, at the moment, the consensus at the conference is coming from the fact that, Indian IT over the last 2 decades has shown a massive resilience. They have come up through, large volatility extremes in the past. They can reinvent and adapt themselves at a very fast pace. And I think, yes, there is no doubt that this whole AI re-rating that has happened in at least our neighboring countries like Korea, Taiwan, Japan, and of course the US, right? We have not participated in that trade, but I wouldn't write off the sector just yet. I think, yes, this consolidation has already happened. The mood coming out of most of the companies coming here is that from corporate India, from the IT sector, is that wait and watch. I think the worst is behind us. And the contra play from a sector perspective, I wouldn't be surprised that IT will probably in the next 2-3 quarters outshine versus rest. That the bearishness in the sentiment is at the extreme. And as I said, the pendulum shifts from one side to the other. Don't write off the Indian IT sector just yet.
That's a headline that you've given us, don't write off the Indian IT sector just yet. In fact, you'll be surprised as to how it could perhaps be an outperformer from here on itself, Shiv. But, since you're in the mood to talk a little more, you were very kind when you said that we've seen a painful consolidation over the last 12 to 18 months. I think for a lot of those who have invested in mid and small caps would say it's not just consolidation, it's painful correction that we saw from the highs as well. Understandable that some of them had run ahead of their fundamentals. But now do you think after that, 30, 40, in some cases, over 50% correction from the peak, these valuations are attractive? Are people taking note of mid and small caps once again? Because the street definitely is reacting positively to whatever numbers that have come so far.
So great point. I think, one has to put things in perspective. The India growth story, right, in my perspective, is that the metal will be tested once, if you want to be bullish in India, right, you need to have conviction and patience. Real wealth creation in India will come from a long-term perspective. No doubt, the last 12 months have been painful, especially in the small and mid caps. I think what will gravitate, we have just found a structural base. A lot of events have happened over the last 3 weeks. The entire market was waiting for the overhang of the US trade deal to get over, and that's been announced, which is great. I think what you will find is, it is a large play, and there's a lag time between, earnings showing up. And there was a period from 21 to 24 in India where prices were running ahead of fundamentals and earnings. The readjustment has already happened. The other aspect that one needs to realize that India, in that phase, a rising tide lifts all boats. India was a beta play, and that is what you saw with, what was happening in SMEs and the mid cap and small caps, right? There was a lot of froth in that sector as well, which has now cleaned out in my perspective. I think what you will see is India is going to become an alpha play from here. What I mean by that is, when you're looking at the conversation from most corporates and both domestic and foreign investors, a very re-urging theme is coming out that it is going to be a lot more alpha driven. What I mean that is that you need to play your sectors right, you need to play your stocks right? And I think that's where most of the discussions are gravitating to. Where are you going to see earnings trajectory continue to improve? And that's where you will see investors put liquidity and momentum into play, right? And talking a little bit more about sectors, we talked about IT. The two sectors that are coming to my mind discussing from clients, no doubt in India, banking and financial and NBFCs remain the main transmission mechanism for India's economic resilience, right? And within that sector, we all know, bank balance sheets are the strongest they've been in a decade. There is low corporate leverage, right? And I think volume growth in the next couple of quarters is going to offset the margin compression that we saw from the rate cut cycle. So there is going to be a re-rating cycle that's going to happen. That's a number one sector that's been discussed. And the other sector that I'm very bullish on, and we're seeing that pick up in the theme as well at the conference, is the pharma and healthcare sector, right? Over there also, 3 things I can highlight. I think first is we have a major tailwind from the stability in the US generics. There was a lot of volatility around that. The second is the China plus one theme in the CDMOs continues to play out. And third, which we all been talking about, is the fact that there is a massive private capex cycle going on in the domestic hospital sectors, and that's going to continue. Let's remind ourselves that today the median age in India is 29 years, right? In 10 years from now, that'll be 39 years. So you need high quality, hospitals and private care from that perspective. And this is a theme that's going to play out over the next, in my mind, in India for the next 1 or 2 decades. So you got to be patient, you got to play your sectors right, you got to play your stocks right, and wealth creation will happen.
Well, what you also need, Shiv, along with those hospitalizations, is some insurance to go along with it. That is one sector when you talk about the rising tide lifting all boats. A bit of an underperformer compared to the broader markets, despite the direct premium income growing strongly, about 14 and 14.7% year on year is what we've seen in January. What do you think is going to trigger a sustained re-rating from here? And within the pack, health insurance, of course, seems to be the clear growth driver.
So great question again. I think, as personal capita GDP in India improves, which has been improving over the last couple of years, right? Insurance is in an aspirational sector, right? As you move up the curve in your income group, right? You want to protect yourself. You have the ability to pay the premiums. And, as I said, India is a much structural long-term theme. I think the insurance sector has been, and, again, going through consolidation. The reason why some of the other sectors are actually doing well, we talked about, the hospital sector doing well. It's also the penetration of insurance that is helping the other sectors, and that's going to show up in the data sooner or later as well. We have had a consolidation phase. It's going to, we have all ridden it out. Now is the time to be a little bit more bullish and put your, feet to the accelerator. And I think, come 9 months, this Diwali, I think India will play out a lot better than rest of EMs. We all know the stats. MSCI India has underperformed emerging markets by almost 38-40%. And if you look at a 12-month rolling period, this is the longest stretch of underperformance that India has seen. I think we're going to play catch up in the next couple of quarters. One more stat I want to give to you and your audience, right? In 2026 calendar year, India will be contributing 18% of total global GDP growth. What that means in plain simple terms is that out of every $5 that is created, wealth generated in the planet, $1 will be generated on our shores. And that's the wealth creation opportunity that I'm talking about, and that will automatically play into re-rating of some of the sectors.
Well, Quite a passionate appeal for India and its outperformance going forward. Shiv, wish you good luck. May that optimism rub off on the market as well as we speak. Definitely rubbing off on a few of the sectors. We're seeing decent pickup in the new age internet companies right now. We have Eternal, which is up 4% after correction. The stock has seen a fair amount of recovery from the lows. We're also seeing that rub off on something like a Swiggy and Sapphire. So a lot of the QSRs doing extremely well. And in the new age companies, delivery as well is one which is picking pace right now. So the broader market's doing extremely well. What we'll do is take a short break, come back, focus on the market macros as well. All bond market action with Manisha Gupta on the other side. Stay with us.